One of the biggest mistake that new investors make is they don't properly account for all of the expenses that they're going to incur throughout the entire process. Okay, they look at the price that they're going to purchase the property for, and this is for buy, fix, and flip investors. They look at the price they're going to purchase the property for. They look at the cost to fix the property or upgrade the property, whatever they plan to do to it, right? And then they look at the comps to see what they can sell it for. And they may account for a few other costs in between, but there are a lot of costs that they miss when they're trying to calculate what their potential profit margin is going to be. You have to break it into three categories. All right. You have your acquisition costs, you have your carrying costs, and you have your selling costs. Right. So every single expense that you incur to acquire that property, that's your acquisition cost. All of the expenses that you incur while you own the property and you're going through the process of repairing it or upgrading it, that's your carrying costs. Okay. And then all the expenses you incur when you go back to sell the property, those are your selling costs. You have to account for all three, or you're not going to properly calculate your profit margin, and you could actually end up losing on a flip instead of making money. So make sure you actually spend the time to go into all of the details, look at all of the research, break it down, and understand all of the expenses that exist within these three categories. If you do that, you will understand how to build out your property profile so you can target the right properties at the right price, and you don't get yourself into a situation where you get into a losing investment.